What's going on, guys? So today we're going to talk about the three stocks that I'm going to be looking at Monday morning. All right, so let's dive right in, guys. So very first stock I'm going to be looking at is NVAX. Now I have already popped up on the screen the reason why I'm looking at it. Number one reason I'm looking at it is because NVAX is a biotech stock, and it's one of the companies that's coming out with the vaccine for the coronavirus. Now, as you can read on the chart right now, it says why Novavax's coronavirus vaccine might be first to the market. Excuse me. I already did the research. I already read up on all this real quick. Do your own research. Make sure you read up on it, and make your decision from the news or whatnot. But NVAX is going to be the very first one I'm going to be looking at. Now we look at the charts real quick. Now NVAX, what this did on Friday was amazing. It went from 107 to 132, and then it came back down to 124. Now NVAX is a stock that moves more $1.50 on average, sometimes a little more than that. But if we take a look at the daily chart, as you can see right here, so the high that this went was 189, and then right now it's closer to the support at 184, or I'm sorry, $84 than it is to the high. But I'm thinking that this is going to start going up more than anything. So I'm liking that. One, because of the news, that's probably going to be the first vaccine out, opposed to Pfizer or Moderna. And it moves more than $1.50 on average, which is fantastic. It's in my wheelhouse. It's what I love trading. Love trading stocks that move more than $1.50, preferably around $3 or so. This is in my watch list of stocks that move more than $2. But as of late, it moves about $1.50 before yesterday and the day before. So that's one of the reasons why I'm looking at NVAX. It's going to be on the chart, number one chart for Monday morning. Next one is going to be Jmaya. Now Jmaya is an African e-commerce company. Now back a couple months ago, this was the high of $21. Then news broke out that their earnings was horrible, and something was going on with their company or whatever, and it went from $21 to $8. I found the bottom at $8, and it's been making its way up little by little. Now the chat on this stock here is that long-term investors and swing traders are taking a huge liking to this stock. Now if you take a look at the company, okay, now this is an e-commerce company out in Africa. Now, think of like Alibaba or Amazon when they first started coming out. Now you can buy everything on this e-commerce website. I mean, food, liquor, electronics, anything and everything. It's a growing company. So as of right now, they don't have anyone that's merging with them, but maybe they will down the line. I don't know. I'm going to keep my eye open on this stock. I am thinking of owning this stock long term as well. It might be a bumpy road. It might drop down a little bit more, but I do think it's going to end up going higher and higher, around the couple hundred area around there, which would be fantastic. So, and apart from that, as of late, since about 7 days ago, this has been moving more than $1 on average. And because it's such a cheaper stock than what I normally trade, I'm liking it. Because it's a $30, $40 stock right now, and it moves on average right now since like 7 days ago about $1 or so on average, which is fantastic. I'm loving that. All right, so Jmaya is number 2. Now number 3, okay, is going to be American Airlines. Why American Airlines compared to what I normally trade? Because American Airlines, where are you? Actually, let me just type in here real quick. AAL. There we go. Now, American Airlines is not a stock that I normally look at because it's just about a 30-40 cents mover on average. But because it made that huge run up, as you can see on the charts, and then you sold off extremely hard, that's what American Airlines has been doing as of late. It does that often. So because it moves about 30 or 40 cents or so, knowing that it does that on average, I'm not going to expect for it to move any more than that. So I'm going to buy a decent amount of shares if it makes the move before the other two stocks, and then get out at a reasonable price. That knowing that it moves about 30 cents or more on average. Now, with that said, anyone who gets into a stock, before you get into it, don't have high expectations that the stock doesn't move more than the average. Being, say, moves about $1.25 on average. So if you get a stock and you get into a price that you think is reasonable, everything told you to get in, and it tends to go up, and you want to sell it higher than when it normally moves, and it just goes down after that, then it's your fault for not doing the homework. You need to gauge the stocks, what they move on average. Now, it's harsh, what I'm telling you, but it's reality, okay? Now, if you go into a stock like Shop, for example, Shop is an e-commerce company. This thing moves on average like 10 to 30 bucks on average. As you can see here, it went all the way down here to the oversold area at 10.13, and then it went all the way up to 10.43. I mean, that's a $30 move right there. It's amazing. So when you get into a stock, whatever stock you choose, if it's not any of the stocks that I pick, which is quite all right, choose your own stocks every single day. Do your homework, check the news, but also know what they move on average. So that way your expectations on the stock of making money, it's decent. Don't go for home runs if it's not going to go past that dollar, if it doesn't normally move past that dollar, okay? For example, so American Airlines, let's go in order. NVAX being number 1, JMaya being number 2, and American Airlines being number 3. Now, the reason I'm choosing American Airlines over the other two stocks, airline stocks being Delta and Southwest, even though they all went up early in the morning and then just went down slow during the market, is because I know that American Airlines does those huge waves like that. So let's just say, for example, American Airlines is the stock that moves for me in the morning before the other two, being that I'm looking at 3 stocks, and the first stock to get to a price that I like, and everything is telling me to get in. Support, resistance, my indicators, everything is telling me to get in. I'm going to get in with a decent amount of shares and expect to get out around 30 cents or so. Now, if it keeps going higher and everything tells me to keep staying in until it doesn't, then that's great. Then I wrote it for more than what it normally moves. But just keep your expectations to what it is. If it moves $1 or so, $1.25 for example, and you get in at a decent price and it moves that dollar, and all your lines and indicators and everything are telling you to stay in it until it gets to, say, $1.25, and then everything starts to tell you to get out. Get out. Don't expect for it to go higher than what it normally moves. It normally moves $1.25. That's all it's going to do, unless there's some amazing news that broke out. Then it's basically at that time a huge momentum stock. Then then ride the momentum. But if there's nothing there and it just moves on average that $1.25, then get out. Don't take those home run hits. Take those base hits. Base hits is what we're doing, especially since we're doing a small account challenge. At least I am, since I'm showing other people a small account to make money with a small account. Now, I took all my earnings out in the beginning of November, and I just stuck with what I first started about a year ago or so, the same amount that I first started with, and I'm taking these base hits. Now, there's 5 days in the trading. There's 5 days in the trading session. Okay, got Monday, Tuesday, Wednesday, Thursday, Friday. All these are base hits. Your last day, Friday, is your home run. You're home. First base, second base, third base, fourth base, home. That's it. All right, take your base hits. Now, you have the capital, okay? A base hit for you could be 150. Man, that's awesome. But take those base hits. Don't go for home runs unless you know what you're doing and you can stay in for home runs. But for now, since we're doing the small account challenge and you are following me, we're going to take those base hits. If you stay in a trade longer than you should and it goes the other way and essentially becomes a swing trade and you're bag holding it, then, hey, it is what it is. But we're trying to get in and out in the first 30 minutes of the market. So, that's the advice I'm going to give everybody with that. But these are the three stocks I'm looking at: NVAX, JMaya, and American Airlines for Monday morning. If anything changes, I'll let you guys know early Monday morning. And if you're looking at what I'm looking at, I'll let you know early Monday morning. If you're looking at something different, please do your homework, know what the stock moves on average, and gauge your entry with your deviation lines or whatever it is you use. Make sure you get in at a good price. Don't chase the stock. Let the stock come to you. All right, guys. Have a good evening, and I'll see you guys early Monday morning.